Hello, and thank you for joining our webinar on preparing the loan estimate. Please make sure you're listening through your computer audio or through the GoToWebinar app. It's available to download to your phone from your registration confirmation email. Welcome to today's Calix webinar. We will be starting shortly. To hear the audio throughout the entire session, enable or adjust your computer audio or download the GoToWebinar app on your Apple or Android device. Thank you for joining today's webinar. We will be starting in just a few minutes, as many are still continuing to join. For the best audio experience throughout the entire session, please listen through your computer audio if possible, and enable and adjust it as needed. If computer audio is not possible, you have a link in your registration confirmation email to download the GoToWebinar app onto your Apple or Android device. Hello everyone, and thank you for joining our webinar on preparing the loan estimate. I'm going to put up the housekeeping with the legal disclaimer. Next, if you have any questions related to this webinar, you can use the chat feature, and one of the consultants that we have on the call with us will answer you. Any other questions can be answered with our direct support at 1-800-342-2599. I'll be your presenter today. My name is Allie Whitaker, and I'm the Professional Services Training Team Lead here at Calix Software. Today we're going to be covering the loan estimate and where those fields map from, as well as the payoff and adjustment screen and how that interacts with your loan estimate. I've opened up a loan, and we're going to go over to the loan estimate. I'm going to go to the forms list on the left. You can see that this screen is mostly gray. That's because the fields are flowing over from the fees worksheet as well as the Truth in Lending. The top section has dates and rate lock information. These come directly from the fees worksheet top, but they can also be changed on this screen as well. The date issued at the top is the date that will show on your loan estimate as the date prepared. In the lower right, the rate lock period. If you're wanting your loan estimate to say that it is locked, you'll have to fill in a number of days in this rate lock period, that gray checkbox, to switch over from the no to the yes. This is the only way to get the loan estimate to say that it is locked. The applicant's property, sales price, estimated property value, and appraised value, as well as your loan terms and loan type, these are all going to come from your borrower's information screen. So if you do need to make a change with these, you need to go back to that screen and update the information there for it to flow over to your loan estimate. The loan product line will come from a combination of selections from the Truth in Lending screen. Here on the Truth in Lending screen, if you're wanting the product line to show as a balloon, you would change the term in due. You're also able to make changes to the term in due on the borrower information screen. If you want your loan to show as an interest only, you would enter the number of months and then click the Calculate Qual ratio at the interest-only payment. This will change the calculated payment and also your product line on your loan estimate. If you're wanting your product to show as an ARM, you'll drop down to the Rate Adjustments and enter your information there. Above each of these sections, you'll see a blue header that's underlined. This is a link, and if you click that link, it will open up and it will give you a description of each of these fields. Over on the right, we have a buy down area. If you're wanting to have a buy down show, you'll first select from the drop down and then enter the number of months at that lower rate, and then select if it's going to be disclosed as a step rate or a step payment. I'm going to take our buy down off the example for now and go back to our loan estimate. In the top right in our product line, we now show an interest only and a 5/1 adjustable rate. You can also see in the loan terms that they've adjusted, putting check marks in the changed interest and payment areas, telling you when it changes and how high that rate can change too. You have the prepayment penalty and the balloon payment. Again, the balloon payment can be made by changing the term and due either on the borrower's information or the Truth in Lending screen. But the prepayment penalty is again on the Truth in Lending screen near the bottom. You're able to enter the information here, and if they have a prepayment penalty, what that will be, and the time frame in which that penalty would occur. At the bottom of this section, there is an area for escrow. This area has a property tax box, a homeowner's insurance checkbox, and other. Over to the right, it says in escrow, and we currently have 2 of these saying no. To update this section, we'll need to go back to the fees worksheet in section G, the escrow area. So let's go back over there. In section G, each fee has the checkboxes off to the far right. Section G has an extra checkbox off to the right called escrowed. If you want the table on the loan estimate to say yes, it is included in the escrow, you'll need to check that far box. I'm going to check our hazard and our property taxes, and then go back over to our loan estimate. Now our property taxes and our homeowner's insurance both say yes, that they are in escrow. Let's go back to the fees worksheet and we can walk through if you have other fees listed in that area. Let's say this property also has school tax reserves and flood insurance and an HOA. But none of these are being required to be escrowed, so we're not going to check the escrow button to the far right. I'm going to go back over to our loan estimate to show you what that looks like. Both property tax and homeowner's insurance show yes, some in the escrow section. This is because we had property taxes checked for escrow, but we didn't check the escrow button for the school tax. So that's why we have some included in our answer here. The same thing with the homeowner's insurance. The hazard insurance was included in the escrow with that checkbox, while the flood insurance was not. So again, we have the yes, some. The other item below that shows our HOA, and then depending on if we checked the checkbox for escrow, would say yes or no. Lower on the loan estimate, each section is going to have the fees flow over from the fee worksheet, and you can review those here. There's a calculating cash to close area near the bottom of the loan estimate, and you have the option to select the standard form, which is for purchases, or you can check the other box for the alternative form, which is used for refinances. Under that, we have our adjustable payment, our AP table, as well as our error table over to the right. Any of the payment differences or rate changes will be shown in these 2 tables, and this again comes from the changes we made on the Truth in Lending screen. Below that, you have a loan comparison of 5 years. And below that is the other considerations. These are going to be your assumptions, late payment, refinance, and servicing. Something to note here, if you are entering information or making changes in this area, it is not going to print on the loan estimate. You will need to go back to the Truth in Lending screen to enter that information so that it will pull over into your loan estimate. And finally, at the bottom, we have a confirm receipt checkbox. If you do want to have a signature line for the loan estimate, you would click here and that line would be provided. I'm going to have us compare our loan estimate now and our fee worksheet before we move on. I'm going to keep this screen open and open my fees worksheet. And then keep that one open so we can view them at the same time. We've got both of these forms open, and you can see the calculating cash to close on both of these are different. The loan estimate has a higher number for the borrower bringing cash to close. This is because we have items that are marked as POC or an adjusted credit, like the aggregate adjustment, that aren't being reflected on the loan estimate as they are on the fee worksheet. So to get those credits on the loan estimate, we're going to need to go to the Payoff and Adjustment tab. You can see this at the bottom of the fees worksheet or the loan estimate. Let's walk through the layout of the Payoff and Adjustment tab. Up at the top, you're going to have credits such as your cash deposit, and you can see this field is gray. This field flows from your Section 2 and 3 application, where you can enter credits like your earnest money, and that will flow over to the bottom of your fees worksheet, as well as the lender loan information page 2. So if you do want to edit this one, you are going to need to go back to the fees worksheet at the bottom or over to your loan application section 2 and 3. I'm going to enter $1,000 for our cash deposit. You can see this area with the lender seller credits matches to what we had on the payoff and adjustment screen that we just came from. This area flows over directly from the payoff and adjustments area, so you can make changes there or on the fees worksheet. The second line is the lender credit. You'll see the second box of the lender credit is grayed out. This is an auto-calculated field from Section A for any lender credit from the rate. Let me scroll back up and show you that. Up here, you see I have $1,000 as the lender credit. So this is what is automatically taking that $1,000 down to the bottom, since I have the copy as lender credit checkbox checked. The seller credit allows you to enter the seller credit here. Let's go back over to our Payoff and Adjustments tab and see our updates there. So our top matches what we just had on our fees worksheet. The second section of the Payoff and Adjustments area is where you would select the Copy from Liabilities button, and it would enter all the liabilities being paid off for that refinance. Below that, we have our adjustments and other credits. This is where you can put in the credits when you're working with a purchase, such as your paid outside of closing or an aggregate adjustment credit. Let's go back to our comparison with the loan estimate and the fees worksheet, the cash to close area. So our cash to close on our loan estimate is $18,950, and our fees worksheet has $17,450. So the difference between these is going to be the credits that are paid outside of closing and any other credit that we have listed. Let's open up the fee worksheet and see what credits that we have in there. At the bottom of our fee worksheet, it has a total POC line for us, and this will tell us how much we've put in and marked as paid outside of closing on our fees worksheet. So we can put this number directly inside our payoff and adjustments. But I also know we did an aggregate adjustment, and this credit also needs to show up on the payoff and adjustments. Since we're doing a purchase, we're going to put our information in the adjustments and other credits. I'm going to label this one as POC and then type in the amount, which was $500. And then our next one is the aggregate adjustment for $1,000. Let's go over and look at our loan estimate and our fee worksheet. So both our loan estimate and our fees worksheet now match. On the loan estimate side, you can see right above that cash to close the adjustments and other credits that we just added to make that match. Let's switch over and work through a refinance so you can see how that would work in the payoff and adjustments screen. I'm going to go over to our loan estimate and scroll down to our Calculating Cash to Close. Since we're doing a refinance, we need to change this checkbox from Standard over to Alternative. And now we can open up our fee worksheet and compare the cash to close with what we have on that. On our fee worksheet, we have the borrower bringing $4,450, and over on our loan estimate, we have them bringing $179,050. There's a big discrepancy between these two. So again, we need to visit our Payoff and Adjustments screen because we need to put in any adjustments, credits, or liabilities that are being paid off. The first thing we're going to do with the refinance is click the Copy from Liabilities button up at the top. This is going to populate all of the liabilities that we've marked to be paid off at closing inside of the individual liability. Let me go back over to our section 2 and 3 and show you what needs to be checked. I'm going to open up my liability here. And in this line, you need to have paid off at closing checked, and that is what will allow the button on the Payoff and Adjustments tab to pull the information in. Back over to our Payoff and Adjustments screen. Since we're doing a refinance, we're going to put our paid outside of closing item and our aggregate adjustment up at the top area as a negative number. The area at the bottom is only used for purchases, so it wouldn't be read during our refinance in this situation. So I'm going to make this top one my POC and make it negative 500 and make my aggregate adjustment a negative number as well. And now we can go back and look at our loan estimate and our fee worksheet. Both our fees and our loan estimate now show us bringing the same $4,450 to closing. Thank you all for attending today's webinar. We hope you've received some helpful information. If we did not get to your question during the webinar, we will reach out shortly with that reply. At the end of this session, you will receive a 5-question survey, and we would appreciate you completing that so we can improve our training program and follow up with you if you so choose. To further assist you, a recording of the webinar will be available through the Calix customer portal very soon. Have a great rest of your day.